Welcome to the Explainer. Today, we're decoding a fascinating financial tool, the stock warrant. What if you had a special ticket to buy a stock at a set price, no matter how high it goes?
Okay, let's get right into it. What exactly is a stock warrant?
It's basically a long-term option that comes directly from the company, a promise for a future deal. Every single warrant just boils down to these three things. Pretty straightforward, right? Definitions are great and all, but let's see how this actually works in the real world. All right, so how do you actually make money with one of these? Let's just follow the numbers. Imagine you get a warrant with a strike price of 50 rupees. That's your locked-in price. Now, let's say the stock's market price climbs up to 60 rupees. And boom, there's your opportunity. You can buy for 50 what's now worth 60. You see the path here? You just follow these steps to turn that paper right into potential profit. But hold on, it's not all upside. We've got to look at the other side of the coin too. The big pro? Huge opportunity. But the cons are real. They can expire and become totally worthless. So, after all that, what's the bottom line? What do you really need to remember about this? It's all about that right to buy. It's high risk, high reward, and remember, the clock is always ticking. So, are they a smart play or just a big gamble? Well, that really all comes down to you.